Folks, welcome to Pumpamentals, a new version of fundamental trading and investing that will return 100x more profits for you. Now, what exactly is Pumpamentals? Well, why don't we ask the Michael Jordan of Pumpamentals, which is Donald J. Trump himself. And what does our main man here tell us? Well, he struck a deal with the United Kingdom, and in that deal, which he pumpamentaled out, the result was the U.S. now having to pay 10% tariff when they were only paying 3.4% before, and the UK, who were paying 5.1% tariffs, are now paying only 1.8%. And that's a literal screenshot of what was presented at his press conference. And that was pumped up, right? I mean, that was a great deal. Number one, it was a great deal because the UK has a trade surplus with the United States. So, let me get this straight. So, the country that has this trade surplus with you, you banged out a deal with, and it resulted in this tariff numbers decreasing and increasing to the benefit of whom exactly? And, oh, by the way, the UK is like the brother of America. I mean, literally the one who's joined to you, right? Like your staunch ally. And it took this long for this one trade deal to go through. I mean, this is like going to a new restaurant that you launch and you're like, yeah, man, this restaurant's doing really well. Look at it, it's packed. And people come in and look and they see who's in the restaurant. It's just your friends and family. That's basically what this trade deal, the first one of many to come, is. And you know, this was really pumped up, right? This was like, yeah, you know, this is a good deal and a lot. So this is what Pumpamentals is. And you know, if you recall what's been going on, Mr. Donald J. Trump has been pumping a lot, right? He pumped the 90-day, well, the 90-day was leaked out and then the White House said it was fake news, remember that? And the stock market like exploded higher and then crashed right afterwards. And then he came out and said it's for real, 90-day delay, after which the stock market just completely exploded. And before it exploded, remember he said, buy stocks, or it's a good time to buy stocks, which he said again, right, just last Friday before this weekend meeting with China to talk about trade and other things were to start. He again said in the press conference, it's a good time to buy stocks. I mean, if that isn't pumping, you might have to ask a couple of bunnies what pumping really is. Now let's move on to what else is going on in the world of Pumpamentals. Well, the Chinese and American contingents are meeting, as I speak actually still, over the weekend to talk about, among other things, trade. And, you know, there's this thing that was going around online about how the Chinese like left abruptly, right? They left after about like 15 minutes, suddenly. And it turns out they came back afterwards, but you know, if the markets had been open, we would have had like some crazy check. Good thing the markets were closed, right? Because they actually came back and continued their talks. And who knows what was going on? Maybe they abruptly ended and they came back after, you know, they talked to their bosses, or I don't know, they went out to eat lunch. Who the hell knows? But this kind of like, you know, they met, they left, they met again kind of stuff, and the whole Pakistan and India, you know, peace. And then after that, there's still shelling. So is it on? Is it off? And then there's this thing going on with Ukraine, right, where they gave basically Putin an ultimatum to which he kind of not really agreed to with a ceasefire, but was open to talk. So, and that's still being played out. So a lot of things going on, but be careful of what you believe, because what Donald Trump said about the meetings going on in Switzerland between China and his boys over there was that it was a very good meeting, right? It was a very good meeting. Many things discussed, much agreed to, you know, total reset, like reset, really? Total reset, negotiated. You know, we want to see good for both China and the U.S. and opening up of China, and great progress made in all caps. More pumpamentals, right? And this should pump the markets up. And it probably will, right? Which will probably get faded right after. We'll talk about that a little bit later in the episode. But, you know, if you see stuff like this, okay, This is where Pumpamentals meets reality and facts. Now, if you look at actually what happened in the past, so this is not the first time, China and the US went into this tariff thing, because Trump did this in his first term in 2016, right? So, and there have been other meetings with China between Trump and Xi and China and United States dignitaries. And we could look back at what happened before, right? This is so we just gotta like remember what happened with documented facts from the past, right? And so when he says stuff like, we had a very good meeting today with, in Switzerland. What happened was they met for 8 hours and they're meeting again today, right? And if we look in the past, what happens in the first rounds, first day session 2018-19 Trump is very good, excellent language, and no deal emerged, right? So literally the words very good, right, or excellent was his language, the same literal words, right, after the first day session, and no deal emerged, okay? So just, these are facts. Then he said stuff like, well, great progress, many things were discussed, right? So what literally happened as of now is no joint statement has been made. Nobody really knows what happened, right? Except for what Trump just said. And so if you look back in time, he said in 2019, substantial phase one deal after a late night meeting. But tariffs stayed until Jan 2020, which is many months, like a whole quarter later, right? Way past the 9 days we're talking about here in his delay. So again, great progress made, substantial phase one deal, but nothing happened until many months later. Then we get to this word total reset. So he said total reset negotiated in China, friendly matter. Literally the word reset was said before by him. This reset rhetoric, right, was used in 2019 in June at the Osaka leaders dinner. Within 6 weeks, the talks collapsed and tariff actually rose, right? Back in 2019 when he used this total reset word before. And he's saying stuff like opening up China to America. I mean, that's just a weird take. Like, it's actually the reverse. I mean, if you think about it, you go to the the US, you can't buy Huawei phones, you can't buy BYD electric cars because there's like a 200 plus tax on tariff, I think, or tax on electric cars, EVs from China. You can't go and buy like looking coffee like from China. I mean, there's a lot of things you can't buy from China in America. Then you go to China, and what do you see? You see like McDonald's everywhere. You'll see Starbucks everywhere. I mean, Starbucks in China is the most in any country, right? You see like, Teslas and Fords everywhere. Like Tesla is like everywhere, right? I mean, I don't understand, like, what's not open. And I mean, China has a lot of American stuff in there. Some of it, which is the largest of American stuff in there, like Starbucks in the world. So, this is a strange take, right? When he's saying opening up as if China has been closed down and, rejecting America or something. I think that's just portraying things in a very wrong way. Maybe to try and get, the unknowing idiot person to believe that, yeah, China is being mean, and when in fact that's totally not the case, right? So, I mean, this was a great table I found that was compiled that pretty much, when you look at the past and look at what he's doing now, gives you kind of a roadmap of what to expect if you take away Pumpamentals. Okay, so then, let's take a look at what's going on with China. And when you look at China, U.S. exports did drop by quite a lot, right? Look, trade surplus with the U.S., right, which is in black, went down. But trade surplus with other countries skyrocketed, right? Particularly Southeast Asia and Japan and EU. And so China is actually doing okay, right? And so here, I'm going to take a second here to explain to you the situation with China. China, on the first go around, long time ago, right? Even before Trump did tariff version 1.0 against China, even before then, China knew that they would have to decouple or decrease their dependence on the American consumer in order to be safe, basically, right? They realized that it was too risky to have just one big partner and have everything dependent on that trading partner. So even all the way back in like 2010, 10, I think, right? Like 15 years ago, they started diversifying. And one of the first areas they diversified was with the Southeast Asian countries, right? What's known loosely as ASEAN. And China struck an open trade agreement with the ASEAN nations, which today is like almost $1 trillion. It's the largest free trade setup in the world, right? And so they knew this was coming, and they've been preparing actually for this day, like over a decade ago, right? They've been preparing for this. They knew this was going to come. And then when Trump version 1 tariff came, they got hit, right? They were not in a good situation compared to the United States. They were under leveraged, and they suffered for that. And they took a hit there, and they didn't implement some of the agreements in version 1 tariff back then. And so they learned from that, and they've been diversifying since then even more, right? Not just with Asia now, but with Africa and then Europe and all this. So they've been just going as far sideways as they can, reducing their dependence on American exports from back then it was over 20% down to what now is 15% and even lower, right? And then after COVID, they diversified even more, right? So just 5 years ago to today, there's a huge they've implemented so many new initiatives, even within Asia, new initiatives like the Belt Road and all these other things, right? So this is something that is not new to China. They've been actually waiting for this for a decade, right? So these guys, make no mistake, they've been planning for this, and we're seeing the result of that, because in this time around, unlike the last time around in Trump tariff version 1, this time they, I believe, have the upper hand. And you can see that. You can see that Trump's publicly negotiating with himself down right before the weekend talk. It's 80%. I mean, what's going on there, right? And he keeps saying she called him, or I'm waiting for she to call. She never called. Since this whole thing started, she has said nothing. Zero words have left his mouth, right? He's letting his minions do all the work for him. She feels like he doesn't have to say anything. I mean, that's literally factual, right? The guy hasn't said a thing, right? He's it's not worth my time, because he has the upper hand, and he does, right? And so that's something to consider. The other thing you need to consider in the setup is that technically America has a consumerism and the consumer, while China has a manufacturing setup. And if you look at those two, the consumer has the upper hand, right? They have the demand to buy whatever you're making, right? If they don't buy, you're not going to make it, and you're toast. So that is in fact the case. By default, the configuration of the U.S. has the upper hand. But if you think about the Chinese culture, though, I mean, they're 5,000-year-old civilization, right? They've gone through a ton as a people and their culture, and they will bow down and listen. And you got to understand, they're a communist country, right? It's the CCP, the Chinese Communist Party. They're communists. And that means that they will listen, coupled with that 5,000-year civilization history, they will listen to their leaders. Even if they don't agree and hate them, they will listen to them grudgingly. And we saw that in COVID. If you recall what the lockdowns in China were like for Chinese people in COVID, I mean, it was savage, right, what they did to their people. But the people in aggregate, sure there were riots here and there, but overall, they took it from the government and they listened to the government. And that was crazy what the government made them go through. And if you think that the government won't make the people go through something like that if they think that it's worth it for the country, you are sorely mistaken. The Chinese people will go through that COVID level, or even worse, suffering for the sake of a common enemy that is a foreign entity outside of China, which in this case, clearly U.S. instigated the terrorists. They started it. So it's very easy for the Chinese to, coagulate together against that. And they can take a lot of pain. And so that's the angle where, even though the Chinese as a producer is at a lower end to the consumer, the amount of pain that they can take is way higher than any pain. Americans are just they're fragmented, number one. So anybody outside of MAGA is already complaining. And businesses, they don't like this stuff, as we've seen. And so the amount of pain in the U.S. that the U.S. businesses and people can take is a lot less, right? They'll just get angry a lot quicker and revolt than the Chinese people. And that huge discrepancy will more than offset, I think, this leverage of just being consumer and supplier. So that's the thing, right? You got to keep that in mind. The Chinese are in for the long game. They're not going to just bow down. You've seen how much pain they can take. And make no mistake, after the first runaround with Trump v1, they came to this fully prepared, and they know it, right? And so let's continue with what I got prepared for you here today. So clearly, they're doing okay. We saw, I don't have this slide here, but what we also know is their exports actually increased by like 8% or something like that, when people thought the consensus was only go up like 2% or something like that because of the drop in exports to the US. So that actually also surprised. Now, you can say that they're lying, they're fabricating data and all that, sure, and it probably could be true and is true. But the point of the matter is, they're projecting this and it's believable because of all the legwork they've done over the past decade. And what you believe is basically reality at the end of the day these days, right? Okay, so moving along. This is another thing that happened, right? Most pretty recently was as I was saying, there's the ASEAN meeting. Now it's ASEAN +3, and who are the three? Is the Chinese, the Japanese, and the Koreans. These three are big economic engines in Asia, along with the biggest one, which is China, number 2 in the world. Then you got Japan, which is, I believe, number 4, and Korea. I mean, these are normally enemies. Okay, I tell you, Koreans don't like Japanese, Japanese don't like Koreans, right? And the Chinese, Japanese don't get along because of all the wars in history, right? But the three came together to mint out agreements on how they can basically come together and trade more together and not be so dependent anymore on the US, right? So this is happening, and we see stuff like this more and more happening. Where's the Japan deal, right? Everybody said the Japan deal's coming. There's no Japan deal. Japan, the finance minister came and threatened to use treasury bills, the debt that it owns of the United States treasury bills, as a weapon, and then he backtracked it because that caused quite a consternation. But that's a signal, right? And to see that these three countries joined ASEAN, this is a sign that there's clumps and groups of countries around the world that are basically banding together to limit the risk of being exposed to an unstable and unpredictable big consumer and partner of theirs, which would be the United States. Now, we got to talk a little bit about the macroeconomic cycles we're entering here, right? And so, as much as Pumpamentals feels good, there's a bigger picture going on. And one of the, very interesting and most looked at, or should be most looked at, ratio is the U.S. stocks versus gold ratio, because this thing is a very long cycle. Now, whenever this thing is going up, you're in a good setup, right? And these go up for decades. However, when they start going down, bad things happen, right? And when they go down, it's it's something to remember in the century. And we're heading back down. This chart is basically saying when the price of the returns, the logarithmic returns of gold versus equity. There's another chart which actually is the price of gold versus one share of S&P, and that's a 1-to-1 ratio, but they essentially share the same thing, and the charts look very similar. And we are starting to trend down here, right? If we really if gold continues to start going up and up and up, which it clearly has, right? And stocks tend to just meander around where we are, this is going to continue going down, and that is a harbinger of really bad things to come. Make no mistake about that. And if you look at, what's going on in the world, and this is the end game, right? This is the global debt. $324 trillion, right? It has just skyrocketed. At some point, probably sooner than later, we are nearer to the end than the beginning here. There's just too much debt in the world because every currency in every country has borrowed and printed too much money, where the system itself becomes suspect and people will look to get out. And one of the ways they get out is go into alternative assets of stores of value such as gold, right? And other hard assets. And so when you see such high amounts of debt, we have transferred debt from like the commercial and private sector now to the sovereign area, because they were the buyers of last resort. Central banks are the saviors of last resort. They come to the rescue when everything else fails. And, in the last run in 07, 08, in that financial crisis, they came. And more recently was, SVB, Silicon Valley Bank in the US, they came to save the day, right? But then what happens is they take on all that debt. And then now it's the sovereign, right? The national debt, the central banks and borrowing and debt and borrowing and spending has gotten to the point where it's just too much. It could collapse on its own weight, right? And with the rise in interest rates, because of rising yields, which we'll talk about, this stuff is scary stuff, man. I mean, look, let's see where this takes us. We know where it's taking the Japanese 40. So first of all, the fact that Japan has a 40-year bond, right? It's not even 30 years, it's 40 years. That's how bad and desperate it got, right? They had to create a 40-year, might as well call it a 400-year bond. Who's going to be alive to collect that? Look, the 40-year Japanese bond is just skyrocketing vertical, right? This is very bad news, right? This is very dangerous because, as you know, Japan is the distribution center for the world when it comes to dollars. Dollars go to Japan because of yen carry trade, and from there it goes around to wherever, right? So Japan is like the wholesale distributor of the dollars, and you got their 40-year bond yield skyrocketing, and they can't sell their debt anymore. This is very, very, very dangerous stuff, right? And it's not just Japan, because the United States itself is struggling with high yields, right? Which is not what Bessent wants. This is the nightmare of both Bessent and the Fed Chair Powell, because this, first of all, this is basically your mortgage rates, right? And it doesn't want to go down, even though when they cut interest rates, when Powell started cutting rates, it didn't go down. And after Trump came on board and all this tariff stuff, their hope was it would go down. But no, it's been going up. And most recently, it's been climbing up and up again, along with all the other tranches, the 10-year as well, and 2-year. This is not a good situation. If this goes anywhere near 5%, which it may, it's looking like it could. Remember, that's what caused Trump to suddenly get all scared and like pivot away from being so harsh against China and saying the 90-day, delay, was when the Treasury yield started going up back, about a month ago, right? A month ago, it started going back up, and that's when he had to back off, right? The bond market was imploding, and so he backed off, went down, but it's going back up again. So let's see what happens here. But this is not a good situation. And as I've been saying, the result is gold just, hitting all-time highs. Like, this is a weekly highest ever in gold's history weekly close, right? So there's no coincidence that this is going up just like the way the yields are going up, because nobody wants the sovereign debt anymore because we have too much of it. Now, let's talk a little bit about what's going to happen, what I think is going to happen in the short to medium term with the stock market. I'm going to start off first with this article about what DeMark says. Now, if you don't know who DeMark is, he is he's a technical analyst who has a big following, and the people who are following are people such as Paul Tudor Jones, Steve Cohen. I mean, basically A-listers when it comes to hedge funds, right? The hedge fund A-list hedge fund honchos listen to this guy, right? They pay him to give them advice on what's going on. And this guy, he's known for, one of the things he's known for is this count, right? Where there's a certain number of sequences of consecutive price action where there's two numbers, 13 or 9, that when you hit it, it's a signal for reversal. And what DeMark was saying was that we are on a daily approaching a 9 count here, right? And when this article came out, there's a 7 count still, so 2 more days left. And it could be that the 9 count could happen tomorrow, Monday, or on Tuesday. We're either there or right there, right? And he's saying that once that 9 count hits, right, we're probably going to have a correction, right? A near-term top in the market may happen within days, right? Is what he's saying. And I've studied his 13-9 counts, and counting is a little tricky, but I do believe that it is quite, given the amount of back testing this guy has done, pretty believable signal to me. And, there's no question that the hedge fund, so Paul Tudor Jones then came out and said, even if China cuts stocks by like 50%, that it's gonna, we're gonna tank, right? It's not enough. And others are coming out now. Now the Bank of America head honcho, Michael Harnet's coming out and saying also, like, buy the rumor, sell the news, meaning buy the rumor of all the tariff and trade deals, and then when the deal comes out, sell the news, right? And I believe we're at that state right now. Now, if you look at what the market is doing in terms of, sentiment, it's very bearish, right? And this is really interesting. So the investors' all sentiment, right, bull bear, is very bearish, right? Still very bearish. So a lot of people are saying, and this is like the survey stuff, like, what are you saying? They're saying they're bearish. But then when you actually look at like what they're doing, they're very bullish, right? Because this is the put call ratio. So the amount of puts versus call, I mean, nobody's got shorts on. I mean, this is as low as it's ever been, right? In the past many years. So everyone's saying like, oh, we're bearish. You come and ask me, I'll tell you I'm bearish. But then if they actually go in their hood and see what you're doing, you're bullish. Right? And so you see this conflicting signals on social media and stuff. But you have to be careful of hard versus soft data. So hard data is this, right? Like what they're actually doing. And soft data is what people are talking and saying. And so the soft data is like, hey, yeah, I'm bearish. But the hard data is like, no, I have no puts, right? Everything's calls going long. What that tells you is people are long, but they don't believe in it. In other words, I will bet long on the market, but I don't believe in it. It's complete hocus pocus pumpamentals that are driving the market up with no absolute reason. But I'm going to go long just to hope, because I think I'm smarter than everybody else to know when the hell to get out when pumpamentals fail and fundamentals rears its ugly head. And that's the fallacy, right? Everybody thinks they're smarter than everybody else and they can get out before it, but that never happens, right? Because that's just the way things always work, and that's where you get the crash. And that's why you go up, and then that's why the crash comes down at a very high, escalator up, elevator down, right? And the elevator down is because exactly what I said. People think they're smarter than everybody else, they get out before everybody else, and that's the fallacy. Now, what we also saw last week was the biggest 4-week actually outflow from U.S. stocks since May 23rd. So even though price has been going up, there's been an outflow, right? There's selling in terms of quantity is going out, right, of the stock market as prices are going up. The price has kind of been stagnating the past 2 weeks, let's say, at the resistance where we're at right now. So that tells you something, right? Out, but slowly hovering is not a good sign, right? Also not a good sign, and I've been talking about this over and over, but look, it's record after record. Now we've had, this according to Bank of America, basically retail investors, right, in a historic buying frenzy ever in history. 21 straight weeks of buying by retail, the most ever in look how much more than any other time, right? That is actually scary, dude. That is, when you've got that many shoeshine boys buying stocks, you better watch out, because, look, I know when COVID, a lot of these, maybe a lot of you even, when COVID hit 5 years ago and the government gave money out to people and people were at home and they weren't going through jobs or they lost their jobs, many people started putting a little money of that money got from government, the stimmy checks, into stock markets, right? And so they started doing like the beginnings of day trading, and then 5 years ago, and then leading up today, now we got a lot of these new people who are doing trading and investments in like, the past 5 years or so. They, these people haven't seen like what happened in 07, 08. They didn't trade through that. They didn't trade through the year 2000 .com bubble burst. They didn't live through that. And nobody here alive has lived through the Great Depression. And I'm telling you, there's a lot of, how should I say it? Inexperience, just lack of time doing this. Aggregate knowledge and experiences that will lead to something like this, right? And this, let me show you the next slide here, because This then translates into this. And this is the part that's not scary for me, but should be scary for all of you out there, which is that now we've had an all-time high of how much percent of your net worth is in the stock market. The last 2 times it was this high was in the dot-com bust, right, at 24%. And the other time was the 28%, 68. You know what happened back then, right? With the beginnings of that whole stagflationary 70s, the lost decade. And here we are. And, I wish this chart would go back to the 1929 Great Depression, because that was also really high, where literally that time it was the shoe shine boy. Everybody, the cab drivers, everybody, well, there weren't cabs back then, but everybody was in the stock market trying to become a billionaire. And here we are today. This is very concerning, right? The markets are in a very precarious situation. We're basically at this level where it's do or die, right? And, there's multiple ways to look at that. One of them is this trend line that people have been pointing out, and we're here, right? We're at the back test. So what's going to happen here? Are we going to go? Is this going to be resistance, or are we going to just bust through it and go up high, right? The other thing that we're looking at is there's also people saying we're in a rising wedge, just like we're in some kind of bear flag, right? So what are we going to do here? And even I'm looking at this, I'm like, hey, look, this is a 20-week moving average, and we're right here, right? And we did a doji type of hanging man over here. So what's going to happen here? Indecision, right? The whole week. What's happening, right? So this is really a critical juncture. And it is at this point where I want to bring up, which I kind of brought up earlier in the last episode, what to avoid, right? And what to avoid is this. Now, what is this? This is what they put up in the roulette tables and casinos. And what it is, it's a screen that shows you, it has a utility, right? It shows you so you don't have to look on the table where the ball landed, which number. But what the casino people found out was if they started showing you a history, right, of whether the ball landed black or red, and it gave you a history of that, they found out that profits multiplied 6, 7x. People just bet. And that's what they're basically the sharks are taking advantage of you. They're taking advantage of what is known as the gambler's fallacy. And the gambler's fallacy is hey, 4 reds in a row, the next one must be black. Right? And we know it's 50-50 every roll, right? Unless it's loaded. But the gambler fallacy is to believe that it will be black, so people will bet and lose. And that's the way the casinos make money on you, right? And why do I show this? Because this is exactly what is going on with stocks. And what's going on in stocks is, well, first, let me show you what is going on with stocks first, right? And so what is going on with stocks is people, they will show you analogies, right? They will do an analog to some year in the past where they'll say oh, it looks exactly like that. And then it'll look like it, right? And so this is an example back in 2020 when there's hey, it looks just like 1929 crash. And so it should go up and then it should go down. And today they're doing the same. They're taking the chart today and 1988, blah, 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 2022. And it's all hocus pocus, right? They're just trying to make it seem like what it used to be by showing you this, right? Well, it happened before, so it's going to happen again. Another version of that is this. You'll see charts like this. And, I'm not saying that they're intentionally trying to make money out of you like the casinos are, but they're trying to get hits and become, furus on the internet and have clout. They'll show you tabular stuff. So this happened this many times, right? So every time it happened, 1 week later, this and this, this. Dude, this is basically this, right? It's and you love it. You can't explain why, but you love it, and you start look at this chart. It must happen this time because it's happened. Look, they play in you. They play in you. It's gambler's fallacy. It's just a more sophisticated, nuanced version of the roulette table screen. And don't go in there and be looking at it and be like, oh yeah, look. Stop it. Let me tell you what the professionals, people who actually became billionaires, right? Unlike you and me and all these chump change. People actually made $1 billion trading, right? Say, because I worked for one of them. One of them Okay, created a fund called the Medallion Fund at Renaissance Technologies, and it is, I think, still the most successful fund ever created, right? The guy who created this passed away last year, but his fund, CAGR, annualized, he returned 60% return CAGR every year for the 3+ decades he ran the fund, right? Can you imagine? And if you look at this chart, this is actually the annual returns. I mean, he never went below 25, maybe a little below 25% return once. He had one slight blip here, and then he had crazy returns, multiples of year, over 50%, right? Multiple times. I mean, this is crazy for a fund because, as you know, a fund has a lot of cash, so it's not easy to move cash around and make these types of returns. If you had $100, you can make 1,000% returns, no problem. But you've got like mega hundreds of millions of dollars or billion-dollar fund. Hey, you can't move the cash around and make this kind of fund and take risk, right? Because you're going to move the market. And for him to do that, it's crazy. And who was the guy? It was Jim Simmons, right? And this guy, he's awesome. Zero application of any fundamentals, pure mathematician, and he built an algorithmic math engine, basically, that just beat the market, right? Anyway, so what did he do? I mean, obviously, he did something to become super duper successful, right? He did something right. And what he said was, he looked for things that could be replicated thousands of times. So he was saying that if your sample size is small, it's hocus pocus. Some people could argue, if you're a statistician or into statistics, you might say, oh, the stochastics matter, even if it's a small sample size, got good stochastics. And that's true to a certain degree. But general rule of thumb, right? Because how do you know this? How do you measure the stochastics? Then it becomes very complicated, right? I mean, general rule of thumb is, what is your sample size? Because, it's an easier way to deal with things. Because if you have a large sample size, it's very hard to mess around and screw around with bias and all this stuff, because it takes care of everything. And so what he looked for was stuff that would show up, back testing, that would be, they could replicate it rather thousands of times over and over again. And then he would use that and he would factor it into his. I used to know a developer who worked at Renaissance Technology. The way they uploaded their code every night for the compile was crazy, right? Nobody knew the full code set in the company. Nobody did, except for a few people, because it was that much of a trade secret. The other person who also said something was Ray, the guy I did work for, right, of another hedge fund. And what he was saying was, basically once something becomes widely known and widely believed and used, it affects the price, becomes the insight's value decreases because it becomes a crowded trade. So he's like, hey, Head and Shoulders, or hey, blah, blah, blah. There's no value anymore. It's 50-50 now because everybody knows about it, everybody's watching it. Doesn't mean like it could go up or down. Doesn't mean it could go down or up because it's diluted now. It's irrelevant, right? So when you looking at stuff that everybody else knows of, you're wasting your time, is what Ray is saying, and I believe in that. So going back to what we're seeing over here, right? So everybody's looking at this. Everybody is looking at this. Everybody is looking at this. It's kind of actually useless, to tell you the truth, right? What will probably happen, and this is what I think is going to happen, is the sharks know that it's useless, but know that many people don't think it's useless and are betting on it, right? Basically all the people who are inexperienced. And they're going to take advantage of them. So what they're going to do is they're going to fake you out one way or the other way, right? And make it seem like, aha, the pattern worked. And so I'm going to double down or load up more. Or I've been waiting and now the pattern worked, I'm going to load up now. They're going to do what it takes to fool you, people who think that these patterns and whatever that everybody knows now is actually working. And it may work, but the way it'll work is they'll fool you, right? What could happen, and this is what I think will happen, is we could pump up on Monday because of Pumpamentals. And that will draw everybody in, right? We'll just pump up a little bit. Oh, we cleared it over the moving average, over the trend line, over all this, over all that. Everybody in. And then they'll take you down, right? And then they'll take you down. That's why in trading, you never ever, on points of interest, like resistance levels and all this stuff, you never take an all-in approach. You always wait, see it break, see a back test and confirmation first, and then after that confirmation, start shoveling in some positions and averaging in, cost averaging or whatever you want to do, right? But you never you never go, before that, because that's exactly how the sharks get you, right? And so I think the sharks are going to try and get people. I think they're going to try and pump this up a little bit, get everybody all excited in, and then just drop the hammer and make everybody lose it, right? And I think rather than going down and up, they're going to go up and down, because that's where everybody's looking at right now, because we've come up so far and everybody's thinking we're just going to keep going up, maybe small correction go up, and that's what the mindset is. So that's what they're going to use against you and the masses and all the retail people who have come in now, as you've seen, to fool you into it, think up, and then go down. So we'll see till next week if that's one. But my take is that's probably what's going to happen. Early in the week is some pump and then some dump later, right? And maybe the next episode won't be a Pumpamentals, but a Dumpamentals. So trade safely, and I'll see you in the next episode. Peace.